Hello and welcome back. Welcome to Where to Put a Stop Loss in Forex Trading. Now, as the title may suggest, we're looking at stop losses within Forex. However, the same principles do apply if you want to trade futures and CFDs and other markets. Just the example that I'm going to show you, it's one that we're going to walk through, is for Forex. I'm sure you're all familiar with what a stop loss is, and we're talking about the initial hard stop loss in this strategy. We're not talking about like a soft stop loss or a trailing stop. We're talking about a fixed hard stop loss. I use stop losses. I recommend most of my clients use stop losses. I expect you use stop losses too. And by the end of the video, I'm going to show you an ideal place to put your stop loss for each and individual strategy. Stop losses do vary. You can't just use a 10 pip stop loss on every strategy or 60 pip stop loss. It doesn't work like that. Each strategy has its own kind of behavior, and therefore you need to put the optimal stop loss for each individual strategy. Now, this is going to be using a rule-based strategy. I've prepared a strategy. It's one I developed a while ago on pound dollar. It's a little intraday sort of breakout day trading strategy, and we're going to go and look at it in Multicharts. It's the trading software that I use, and there's a really neat little optimization feature within that where you can optimize some of the inputs in the code. It allows you to find the best inputs, or what we're looking for is the best area of inputs. That will become clear once we look at the data on the computer a little bit later on. So if you find yourself guessing or always thinking that you're being stopped out in the wrong position at the wrong time, you're not entirely sure whether you're putting your stop loss in the right place, then this video is probably for you. Watch through to the end, and I think you're going to get some good, valuable information from it. Okay, now we're going to look at the screen, look at this little strategy that I've prepared. Like I mentioned, it's like an intraday kind of breakout strategy. It's a day trading strategy that I developed a little while ago on pound dollar, and we're working off a 5-minute chart. So here's the chart. We'll have a quick look at the performance report. It's actually, it's quite a nice strategy. This is, I mentioned, this is data running over a period of 9 years, and we're looking at well over 500 trades from memory. We're looking at 543 trades, in fact. So we've got a very good sample of data. Now, there's this neat little function that I've mentioned in Multicharts. It's not just Multicharts that has this. A lot of trading software provides this, and I'll show you how to use it. So I have an input, which is an input of a value for my stop loss, and we can now optimize that to see which is the best one. So if we click on the optimize function, now you can see the input name. I named it stop loss, obviously, and we've got a start value of 0, so it starts from having no stop loss whatsoever, and an end value of 0.02. Now 0.02, that might look a strange number, but what that is, that actually equates to 200 pips, because we're dealing in Forex here. The step of 0.0005, that's simply 5 pips. So what we're doing is we're going from 0, and then we're going stop loss of 5 pips, test that, 10 pips, test that, all the way through to 200. And I would not normally go 5 pips, I'd normally go about 10 pips, but just so that the demonstration looks very clear, I'm going to go 5 pips today. Why I've only gone to 200? Well, just from experience, I know a day trading strategy like this on pound dollar is certainly not going to have a stop loss anything near 200, so there's probably no point. I could go up to 1,000 pips or 2,000 pips, but there'd be no point, and I'm sure the results will be evident when we start looking at them. So we've got 41 combinations to optimize there. So if we click on the optimize button and let that go through its optimization process, and then we can look at the results. And this is what the optimization report looks like. Now we're going to take note of just 3 of these columns just for this test. Firstly, we can look at this net profit column. That's how much money the strategy made overall. Then we're going to look at the average trade. That's how big the average trade was in a dollar value. And finally, we look at the end column here, which is the stop loss. That literally tells us, the first one we're looking at results of 0, then we look at 5 pips, 10 pips, 15 pips, and so on. Now, if we follow the results, probably don't take too much notice of no stop. It made 36,908, and then that's been no stop loss at all. But we want to know from 5 pips, 10 pips, and quite clearly, you can see if you look down these numbers, they get better and better and better and better until about this point, this midpoint here, which if we look across here, it's 55 pips. Now, again, on the average trade, we start with a 5 pip stop loss. We've got an average trade of 36 all the way through to a peak of about here. Again, it's 55 pips. So we know that 55 is the best value, but we don't necessarily want the best value stop loss. We want one that is stable, and I can show you that with a bar graph that I've prepared. So if we look at that now, and here it is. This is the bar graph showing exactly that same information that we just saw in those in that report. So we can see the left-hand side is actually net profit, and along the bottom, each bar is how many pips for the stop loss. So 0 stop, 5 pips, 10 pips, and so on, all the way through to 150. I didn't include up to 200 because, look, we can clearly see after about this point here, after about 110-ish, the results stay the same throughout. So we don't need to see that. Now we're looking for a nice sort of mid-stable area, and it's quite obvious, isn't it? Look, not only is 55 pips the best result, but it's right in the middle of a stable area. Either side of it, for 20, 30 pips either side, the area is pretty good, pretty stable. So it's actually interesting, it's actually better than having no stop loss at all. Quite often a stop loss will actually degrade the performance of a strategy, but with increased risk. However, in this case, having a stop loss of 55 pips is actually better than having no stop loss at all for performance as well as controlling risk. Well, that pretty much concludes this video on stop losses. I'm hoping that I've explained it clearly enough, and I'm hoping that you can see the value of having software like Multicharts to be able to determine an optimal position for your stop loss. You know, if you'd been using a 25 pip stop loss on that strategy just because somebody told you to and somebody had told them to, you know, 25 pip works well, the results clearly showed on that strategy you would have been leaving a lot of money on the table. On the other hand, if you'd been using a 250 pip stop loss on that strategy, it would have been far too wide, wouldn't it? Each strategy has its own optimal stop loss, and this is the exact process that I go through when I'm developing these types of strategies. That's how I determine what fixed pip stop loss that I use. I may do another video all about comparing different types of stop losses, like that's a fixed pip or fixed dollar stop. Some of you might want to use ATR type stop losses or certain levels like support or resistance. That might be another video. But for now, I hope you've enjoyed that one. If you have, please give it a thumbs up. And if you haven't already subscribed, please subscribe. If you've got any comments, questions, leave them down below. And you can email me if you like, jared@thetransparenttrader.com. And please go over to my website, thetransparenttrader.com, where there's a lot more articles, a lot more tips, and a lot of giveaways on there as well. Strategies a bit like that I've showed you there that I've developed. So until the next video, this is Jared Goodwin, and thank you.